Good morning, traders. It's 8:12 a.m. Chicago time on the 2nd of August, 2018. We will not go down without a fight. It seems like there's some connectivity issues today. It seems to be okay now. Just give me a confirmation that you can hear me. Thanks for waiting around if you did. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning, looks like risk off today. Further jitters on the risk aversion continues to simmer on trade war escalation concerns is the headline. We also got the BOE results, and initial claims came in at 218 versus 220. But the market sentiment really is risk averse this morning. We're gapping down in the ES below the last couple of days. The products that are positive are the US dollar. Looks like the US dollar and the treasuries, as well as the Bund. So risk off today. Crude oil is down 30 cents, trading at 67.36, and the DAX is way off, down 1.7%. 217 points. Euro stocks down 1.14%, 40 points. So it looks like money's flowing out of equities this morning. Again, can you hear me? Anyway, let's keep moving, and I'll just post this later if you cannot. Today, the expectation is for a relatively quiet day. We do have durable goods at 10 Eastern, 9 Central for June, and factory orders at the same time. Other than that, the calendar's relatively quiet. Just keep an eye on earnings, of course. Here's what we expected for yesterday. Yesterday, the expectation is for the market to push higher and to test above the prior high of 28.25, and then from there, all bets are off with the FOMC release. The FOMC, I think I wrote it in later. The FOMC was expected to kick in at 1 o'clock Central, 2 Eastern, and the result from that was for the market to drop. Let me refresh this. Man, when it doesn't work, it really doesn't work. Hang on. All right. Come on, YouTube. You can do it. It's like starting an old engine. Let me do this again. Don't you love all this technical crap? All right. Boom. Push it up. Nope. Okay. How about auto? Auto. We'll keep it at auto. Seems like YouTube is not happy today. Come on, baby. Anyway, what I expected yesterday was for a push. I was looking for a bullish bias, push through 28.25. Here's what actually happened. Forget YouTube. It just doesn't want to come up. Here's what actually happened. We ended up pushing up. We had a very sideways open, decent opening swing range, but completely sideways in range, in value, balanced to the prior day. We tested value high pretty early on and sat tight, and then we finally pushed through the prior high at 25 75. That was in a pre-existing stock zone before selling ensued. This was an impulsive move down all the way through the range. So what we did yesterday was we tested the prior day's high and the prior day's low. Okay, so we poked through the prior day's low. We also tested above the IB high and the IB low. And as I mentioned in the Convergent chat room yesterday, the scenario sets itself up for neutral extreme down, and that's basically what we got. The FOMC came in right in here. We had a quick drop before the FOMC came out right there. Somebody knew something. And then I was looking and trading for the continuation move, which happened. The goal and target was 2803, 2803, 2803 quarter. Couldn't get there. Turned to 2805.50, back to mid, and then provided another opportunity to the low of the day, 2808.50, which was the SOC, for the U.S. China news. So that's where we ended up. What are we looking for the overnight session? Just selling. Came in, popped up on the open, and fell right off. Selling was persistent all night. Oh, audio was breaking up. Okay, hang on, we'll fix that. Just the hits keep coming. Test. Okay. Yeah, I don't know what to tell you. It's just not working out today. All right, so we sold off. Yes, the overnight session shows long liquidation. Wow, it sounds terrible. I can hear it. Sounds just awful. 1 second. How about now? Are you not entertained? Anyway, the overnight session shows long liquidation all the way through, and we're opening in a gap. The main idea for today is a reversion back up. I'm expecting responsive buying back towards 2800 this morning. We are trading just below, and the expectation is we push open auction. Let me change the color. We're going to fight through this just like trading. Open auction. I'm expecting a push through 2800 to pop through to 2803. 2803, consolidate, test the prior day's range, and then consolidate into the close. That's what I'm looking for on scenario 1. Scenario 1 being responsive. Scenario 2 is an open test, impulse down, consolidate around 2800, and then start drifting down. And the goal here is 2788 and a quarter. Very key area here, 2788 and a quarter. Potential drift and return around 2788 and a quarter. Very important area. I talked about it yesterday. Since we could not hold above, the key area to test below is 2788 and a quarter. Okay. I leave you with that. Sorry about the broadcast nonsense. Don't forget that today I'm talking on Futures.io. The subject is, how do I know I'm on the right track as a trader? because I already know I'm not on the right track as a broadcaster. Hopefully this whatever issue is gone by then, but you can find the link on Twitter and in the video description. If you go to YouTube, you'll find the link in the video description. Hopefully you register. Good luck, and I'll talk to you soon. Take care.